Warning, this show is not, I repeat, not financial advice. It is a review of my adventures into stock trading and for entertainment purposes only. Investing carries extreme financial and emotional risk. Do not attempt to recreate anything you see. Today is July 27, 2025, and this is episode 9. Hello and welcome back. I hope all is well. Short of my asthma and allergies kicking my ass today. Ugh. Things are pretty good overall, though. I'm keeping super busy. Between my graphics and marketing business, my webcomic called Bello, and of course what you're here for, my stock trading adventures, there just aren't enough hours in the day. But I'm making it work. Mind you, I'm not complaining. I'd much rather be busy than bored any day. And one way or another, everything I'm doing has a creative side to it, which I absolutely love. Anyway, let's get into it with a story so far style recap. This show is called Seb's Picks. I'm Seb. Hello. And we are here to document my adventures into short-term stock trading. So I started this adventure with $780, and right now I'm trying to build my investment capital. My long-term goal is to make a living at this, or at the very least make a partial living at this. And right now my record stands at 4 out of 5 winning trades. And just to mention it, my main strategy is that slow and steady wins the race. This is not about getting rich quick and throwing caution to the wind. Unlike my friends over at Wall Street Bets. God, I love reading that subreddit. Those guys are freaking crazy over there, but so much fun. Anyway, what I'm looking for is a nice 1 to 5% gain for every trade. I want things nice and steady, and more important, sustainable. Oh, and one other big thing, no FOMO, ever, like ever, ever. Fear of missing out is always a setup for making bad decisions, which of course leads to losing money. Whether it's fear of missing out on a higher sale price or fear of not buying at the lowest that you can. It's just bad news. And say it with me 3 times. No FOMO, no FOMO, no FOMO, ever. All right, that's enough of the intro. Let's get to my trade review. In this section, I review my last trade. We take a look at the stock, the chart, my buy and sell targets, and of course, did I make any money? This time around, I went back to my friend QBTS. I've traded this a few times now and probably will come back to it in the future again. QBTS, or D-Wave Quantum Inc., is a leader in quantum computing, focused on building practical and real-world applications for industries like logistics, AI, and cybersecurity. Pretty cool stuff. This trade took a little longer than anticipated, but again, my priority is making every trade a winner, not meeting a specific timetable. I got in on June 10 for 55 shares, clicking the buy button at $17.05, just like you should click the subscribe button to my channel right now. My goal was to make 50 cents a share, thereby selling at $17.55 or hopefully a little higher. As you can tell from the chart, I went on a bit of a ride for this one. I probably bought in a little higher than I should have, but hindsight is always 20/20, especially when you're looking at a stock chart. I really wasn't worried though, and just had to be patient, as QBTS has been a very steady climber. It had a low of under $14 at the end of June and started climbing higher again in July. On July 17, there was some good buy volume, bumping up the stock, and that was exactly what I was looking for. I was watching it live, as a matter of fact, and I hit the sell button at $18.10. Ultimately, it got even higher, but I was very happy to more than double my original target. Remember, even though we're looking at this now with 2020 and we see that it went even higher, at the time there was no way of knowing that. And we have to remember no FOMO at all costs, because it just sets you up to make a dumb decision. It could have easily crashed back down and then I would have been standing there having to wait again. So anyway, I'm very happy with that trade. So after selling my 55 shares, I made $63.10, aka a 6.73% gain, which I'll take every single time. I know it doesn't seem like a ton of money, and it's certainly not enough to pay the bills. But imagine what a 5% return would be when I have $20,000 or more put into a single trade. That's when we can start looking at this as being some real income. So it took a little while, but QBTS did well. It's definitely one I'll keep an eye on for another go. Next up, let's get into my stock hunt. Stock Hunt is brought to you by me and my webcomic called Bello. It's a comic strip set in a small deli that focuses on the humorous banter between Bello, his co-workers, and their customers. I publish every Monday, Wednesday, and Friday, and you can find it on your social of choice or at QBTS.com. All the links are below. I hope you enjoy reading it as much as I do creating it. Okay, back to the show. In this segment, I pick a stock to investigate and add to my long-term watch list. Today's pick is UMAC, aka Unusual Machines Inc. They're a US-based technology company that focuses on supplying components and subsystems for the drone and autonomous systems industry. Their core business revolves around manufacturing the hardware that powers commercial and military-grade drones, including control units, payload delivery systems, and structural elements. With recent funding rounds and increased defense interest, they're positioning themselves as a critical supplier in the unmanned aerial tech supply chain. In short, their focus is not building drones, but selling the guts that makes drones fly. UMAC is positioned right in the middle of a drone explosion, both military and commercial. The global drone parts market is expected to grow over 11% per year, hitting around $30 billion by 2029. With the US alone accounting for more than $10 billion in the 2024 drone parts market. UMAC recently posted a 59% year-over-year jump in Q1 revenue and raised fresh funds to build out US-based production with key point of avoiding reliance on Chinese suppliers. Taking a quick peek at their 180-day chart, we can see that it starts at about $3 and spikes to over $25 in December of 2024. Then it went through a sell-off until March and hovered at $5 to $6 for quite a bit. June and July saw a pickup to $8-ish, and now it's bouncing between 10 and 12. With some good earnings and other good news, I won't be surprised at all to see their new normal be $16 to $18. Look, the whole market's growing, and UMAC has one of the only Made in America stamps on what they build. Not to mention they're scaling up right now as demand is exploding. Add a growing US defense push away from foreign-made drones, and UMAC has potential to go really, really big. If you want to read more, my references are always listed in the description below. But the bottom line is, drones aren't going anywhere, and this is a good time to invest. Actually, this may be a very good long-term play in my opinion, but with an eye on the news and earnings, UMAC may also be a good short-term investment, and that's really what I'm looking for. So I'll see about moving it to my short list soon. Speaking of which, let's get to my short list. In this section, I picked 3 or so stocks I want to invest in next. We'll go over who they are, their stock charts, and what price points I want to buy and sell at. This time around, I actually have 4, and they are EVTL, Bull, APLD, and Open. Let's start with EVTL, aka Vertical Aerospace. They're a UK-based company building all-electrical aircraft that take off and land like helicopters but fly like planes. They recently completed the world's first public airport-to-airport flight in an all-electric air taxi, and they're aiming to be a major player in both commercial and military transport. With growing interest from defense and airline partners, they're betting big on the future where short-hop flights are fast, quiet, and emission-free. Looking at their 180-day chart, they've had a low of $2.76 and a high of $16 at the end of 2024. In the last couple of months, they've been at $5 on the low end and up to about $7 plus. That's a nice $2 window to make some short-term profit. I'm not 100% where I want to be on this one, especially with their earnings report being released before the market opens on August 5th. There's definitely a possibility of being a bag holder, and with a low volume stock, it may take a very long time to recover, if it does at all. I'm a bit iffy on this one, but let's go with the $5 buy-in and then aim for $6 or $7. I'm not seeing it, but let's go with it. Next up is Bull, aka WebBull. They are a trading platform that lets regular folks buy and sell stocks, options, and crypto right from their phone or desktop. It's one of the top apps for active retail traders, especially younger investors who want fast tools without the old school feel and traditional brokers. Bull is very interesting looking at their long-term chart. They've only been public since April 11, 2025 and didn't IPO, but went public with a SPAC merger. If you don't know what that is, and I certainly didn't, a SPAC merger is a kind of financial shortcut to going public. Instead of doing a traditional IPO, a private company like WebBull merges with a shell company that's already listed on the stock market. This lets them skip some of the red tape and hit the market faster. Think of it like jumping the line with a backstage pass instead of waiting at the front door to get in. Anyway, Bull rocketed to just under $80 right out of the gate. Holy cow. But within a couple of days, it lost about half that value and trickled down to a low near $10 in June. Wow, okay. That's when it finally started picking up steam again, and recently it's been hovering around 1750 during extended hours, which that's looking a little better. I really like Bull, and quite frankly, it's my favorite on the shortlist for this episode. I'd love to get in under 16 bucks and sell for 18 or so. That'd be a nice tidy profit. Plus, Bull is expected to report earnings sometime between August 8th and 11th. And that could pump up the stock even more. Hey, my birthday is August 9th, so maybe it's a sign? Yeah, not likely. But hey, around earnings reports, stuff always happens. So if it's a good report, we might see a push towards the mid-20s, which would be fantastic. Okay, so let's take a look at the last two, APLD and Open. APLD, aka Applied Digital, builds data centers that power things like artificial intelligence, high-performance computing, and even crypto mining. As demand for AI and cloud computing keeps rising, APLD's buildings become more and more valuable real estate, so hopefully there's something there. Open, aka Open Door, is a real estate company that buys homes directly from sellers, fixes them up, and tries to flip them for a profit. It's like a flipping show you watch on TV. Anyway, but this time with algorithms and billions of dollars behind it. So there's potential there too. The 180-day on APLD has some potential. The low was 331 mid-April, and then early June, it jumped up to 1542 after announcing a $7 billion deal with AI provider CoreWeave. Wow, that's a pretty big deal. After that, it dipped back down and has been averaging around $10. For a buy-in, I'm thinking around $9.50 and then aiming to sell at $10 to $11. I do worry, though, that without another big headline, this might stay quiet for a long time and really do nothing. Next, a quick peek at Open's 180-day, and it's been downhill for the most part. God, that's pretty gross. But then it shot up in the latter part of July because it turned into a meme stock magnet. Basically, Wall Street bets and Reddit and stock twits started piling in, hoping for a short-term moonshot. To be honest, at the time of writing this, I wasn't even sure I wanted to keep Open on the short list. I'm certainly not opposed to meme stocks and their volatility, but it's very, very easy to get stuck holding the bag if you're not in at the right time, and I feel like I missed that window on this one. I'm not gonna, but if I did, I'd want to buy in at $2.30 and hope to sell at $2.80 and $3. So that's my short list for my next trade. I'm leaning toward bull for sure, but we'll see what happens. Make sure you subscribe for updates and what I end up buying and for how much. With the short list done, let's get to the bottom line. Before we close, please do me a favor and click that like button right now. It's the one with the thumbs up on it. It really helps with the YouTube algorithm, and you can actively help my channel grow, which I really appreciate because I love making these videos. So as you know, I started this adventure with 780 bucks, and more specifically $783.26. And I'm happy to report that I've now broken through the $1,000 barrier, and we're at $1,005.54. This also brings my trading record to 4 out of 5 winning trades. Not too shabby. Of course, it's still early days, but I'm very happy with that result. So that's it for today. Episode 9 is in the books. Thank you so much for watching again, and stay tuned for more of my adventures into short-term stock trading. Okay, bye.